It's June 5th, 2020, episode 83. I'm Kevin Muir. Patrick is away this week, but we still have a great show for you. This week, we interview Louis-Vincent Gave, where we talk macro, China, and most importantly, skiing in Canada. Then we get a 1-week delayed Kuppy's Corner. But the wait was worth it because we not only learn what Kuppy likes to drink on vacation, but we find out about his new portfolio additions that are sure to ruffle some feathers. And fear not, we still have a great This Week in Trading History where we remember back to the day the U.S. went off the gold standard and a WTF video you don't want to miss. This next interview is one that I've been looking forward to for a long time. Louis-Vincent Gave is considered one of the foremost macro thinkers out there. As the founding partner of GavCal, Louis brings his unique experiences of decades in the Asian region to his market analysis. It is our privilege for him to share his views with the Huddle. Welcome to the show, Louis.
Thank you very much, Kevin. It's a real pleasure to be here.
I've been looking forward to this, and before we even start, I have a little surprise for you. I was going through my library, and do you know what I found in it? I found the roadmap for our troubling times.
Oh, wow. That
Gav called...
that ages both of us.
It's been a long time, yeah, so that is right. So I remember you from, I bought all your books. You had these kind of great books that I thought were some terrific stuff. And I bought your stuff kind of, what was that, almost 20 years ago?
Yeah, no, you're dating yourself. And yeah, you're dating both of us.
Well, anyways, I've been looking forward to this for a long time. Let's talk a little bit about you and how you got into this business. It's a fascinating story. Let's start with where you grew up and you're obviously not an American, and you have quite an international background. So where did you spend your childhood?
Yeah, well, first, thank you again for having me. It's a real pleasure. So I'm originally French, from the south of France, but I grew up in Paris. Went to college in the United States at Duke University. And then came back to France, went to military school in France, became an officer in the French army, because back then I thought, that's what I would want my career to be. I come from a family of mostly army officers, and it seemed like a good idea. But when I got there, I realized that, being a soldier is fun when you're young and not as fun as you get older. And so I realized I really can't do this for the rest of my life. And then I had to confront the fact that in spite of many years of being at school, I really didn't know how to do anything. And so that narrowed down the path of potential careers considerably to the point where the only thing available to me for somebody who didn't know how to do anything was finance. And so I was lucky enough that the head of HR for Paribas was a former officer in my battalion. So I got an interview. I got a job at Paribas. And because I spoke decent English, and I also spoke Chinese because I'd studied Chinese at Duke and had gone to China for a year while at Duke on an exchange program. Paribas was expanding in Asia at that time. And so pretty quickly they sent me out to Hong Kong, and I got there on June 15th of 97, 2 weeks before the handover. The handover, everybody remembers July 1st, 97 for the handover, but it was also the day of the Thai baht devaluation, which was really the trigger for the unleashing of the Asian crisis. So, pretty early on in my career, I sort of had a front row seat to, what in hindsight is a pretty epic meltdown in currency markets, in bond markets, and in equity markets. So I had this,
Louis,
yeah.
Louis, sorry to interrupt. I was going to say, what drove you to go and learn Chinese in university? Was it just an attraction to the culture? Like what, that was kind of an unusual road. Like nowadays, lots of people do it, but back then that was quite unusual.
Yeah. So, funnily enough, I went off to college, and when I went off, of course, to your point, Japanese was far more popular. And again, here I'm dating myself, but when I arrived in college in the early 90s, it was all about Japan, definitely not about China. Funnily enough, my dad, I started school and actually started Japanese. But in my very first week of school, my dad called me up and said, look, I've just done a 1-week tour of Japan and a 1-week tour of China. frankly, I think Japan is done for. What you want to do is learn Chinese. And so in my very first week of school, I switched from Japanese to Chinese, and that was, with the benefit of hindsight, probably a lucky switch, given what unfolded in the next 20 or 30 years. So that was a fortunate phone call from my dad, sort of sent me on a path that turned out to be a pretty profitable path.
I think your dad is you're selling him a little short. I don't think it was so much luck as it was wise. It was a great call. So you went off and you were in Hong Kong for the actual Asian crisis. Why don't you talk to us about that? What you experienced, how it was? It must have been quite something for a young person that's hadn't really seen anything in finance, and then to be thrown into the fire.
Well, if I think you lived through the days of the Asian crisis as well. There were weeks where you had currencies, the Indonesian rupiah, the Malaysian ringgit, the Filipino peso, were falling by 7, 8, 9, 10% a day. Of course, you had riots on the streets. You had, at the very bottom, you could buy properties in Bali for, like 3-4 bedroom properties for $10,000 if you just showed up with $10,000 in cash. So it was, if you were, it was actually a great time to be a young guy earning a decent salary. It was actually a very exciting time. Now, on the work side, of course, things were stressful and harrowing, and people losing their jobs, etc. But on the other side, you quickly saw the scope of opportunities that unleashed in front of you. Now, on my personal history, in August of '98, so sort of a year into the Asian crisis, my dad calls me up and says, "Look, I think this crisis, it's gone on long enough. This is, the valuations are too stretched. I want to invest $1 million in Asian stocks. I want you to find me 10 names that you like, and we'll put 100,000 in each." Now, remember at that point, I'm probably earning, $40,000 a year.
Right.
And so, I find 10 names that I like, and I give it to him, and he buys them. And by October, so basically 7 or 8 weeks later, that whole portfolio that I recommended to him is worth $500,000. It's basically gone down. Basically gone down 50% in the last, from August, and we're a year into the crisis, and so he's just lost 10 times what I make in a year. I'm looking at these positions, and I feel like throwing up every morning as I turn on my Bloomberg. I just feel so sick to my stomach. And I call him up, and he's very relaxed. He goes, "Oh, don't worry." He's like, "Do you think these companies are going bust?" I said, "No, I don't think they're going bust. I think I think these are good companies, etc." He said, "Well, fine, we'll wait." By December, we were back to even, and by June, we had doubled the money. Wow. To some extent, but this is how bear markets work, right? The end of a bear market can be especially brutal. And I was talking about this experience with some clients recently, because of course what's been happening in markets in the past 2 months, 3 months or so, to me it reminded me a lot, some of the market moves, reminded me a lot of what we saw in those final weeks of the Asian crisis, where you had just complete pukes. And I would say this is especially the case in the energy space, where if I look at some of the energy names and the way they completely puked out in March, and then have now since then, of course, been rebounding strongly. To me, it has echoes of the beginning of my career 25 years ago.
Right. So now, one of the things about your career is that you've been very China-centric. When did it become clear to you that China was going to dominate and be the kind of one of the most important themes of the 2000s and the 2010s? Well,
to be honest, I'm not sure exactly when that became clear. But it's, I think if you lived in Hong Kong in the early 2000s, it became pretty obvious pretty quickly that you were in essence, witnessing history. That you were witnessing, that you had front row seats to the biggest economic transformation that the world had ever seen. But perhaps for me, the moment where I thought, oh my, things have changed, was I was at a conference, and I can't remember, I think it was around 2001 or 2002. I was at a conference, and there were a number of foreign investors there, and the room was around half Chinese people and half foreign investors. And China had just basically done a modification on how to account for capital gains tax in a way that basically increased capital gains. And one of the speakers at this conference was the vice finance minister. And so the vice finance minister comes in, gives a speech about all the reform China is going to make, et cetera, and how terrific China is and why everybody should invest in China, et cetera. And then comes the question times. And the question time, this guy gets beaten up like I've rarely seen a public official get beaten up by the locals on this increase in capital gains tax and how basically he doesn't understand anything and he's an idiot, et cetera. And I thought, I'd gone to China to university in the days, in the years that followed Tiananmen, where there was a palpable sense of fear on campus, where you could see secret police everywhere and so on and so forth. And fast forward to 2001, 2002, and here was this public official just getting beat up in front of foreigners like I've never seen anybody get beat up before. And I thought, oh, wow, okay, China has changed. If these guys feel confident enough to basically harangue a guy that's up there, and the guy takes it, doesn't get annoyed or anything. I thought, all right, we're witnessing a major change in mentalities, and good will come out of this.
Right. So now, in between this, you've actually leave Paribas and go start your own firm. Why don't you tell us a little bit about that?
So, in early 2000, I leave indeed Paribas, and I start up initially a firm that's a research firm, a macro research firm with a very strong angle on trying to focus on how China is going to impact the world, how the growth of China is going to impact the world. And my dad, who'd by then retired, joined me, mostly because my mom called me up and said, look, having a retired husband is the worst of both worlds. It's more husband and less money. And so you got to get him out of the house.
Your mom sounds like a wise woman.
Yeah. So you got to get him out of the house. He's driving me nuts. So we set off, Charles and I, and very quickly we're joined by an old friend called Anatol Kaletsky, and the three of us basically start up GAFCAL as a macro research firm. Pretty quickly we expand into China by buying a research firm that was based in Beijing called Dragonomics, run by Arthur Kroger. And since then, we've continued to continuously invest in our research capacity, both on a macro level, but also specifically on a China level. We've bought other businesses. One of them called Fathom, which does Chinese corporate due diligence work. Another called RedTech, which does research on technology in China and technology companies. And still on the premise that, look, the economic transformation that China has both implemented domestically and increasingly is also driving abroad remains one of the more interesting macro trends in the world, and perhaps one of the more misunderstood macro trends in the world.
Right. So let's talk a little bit about that, the misunderstanding of it. Because, there's lots of bears that for many years used to go around taking videos of the empty buildings and talking about how this was going to end in disaster and stuff. What do you think they were focusing on, and what did they get wrong?
So when I first moved to China in the early 90s, obviously we didn't have email and we didn't have internet, and even just calling home was expensive. So I wrote letters home. And the very first time I went to Shanghai, because I went to school at Nanjing, but which is back then was about 4 hours away from Shanghai by train. Now it's like 45 minutes. It's a sort of a greater suburb. but back then it was 4 hours. But the first time I went to Shanghai, I wrote a letter to my dad, basically saying, "Why did you make me learn Chinese? There's empty buildings everywhere. This is obviously a whole house of cards that is about to implode. I'm wasting my freaking time here. This is, Again, remember, this is the early 90s. I was walking around the city and indeed seeing empty buildings with no lights on, and thinking, okay, this is just not sustainable. So to your point that people have been making this argument for the past 10 years, I want to say I first started making this argument 25 years ago. And so there's nothing new about it. Now, of course, it comes back to something very simple, which is always there's what you see and what you don't see. What you see, indeed, when you walk around is potentially the empty buildings. What you don't see is that really for the past 20 years, every year China has been basically moving 20 million people from the countryside into the cities. And that if you're going to do that, you can do it in one of two ways. The first way is you plan ahead. And if you plan ahead, first you're going to have some empty buildings for part of the time. And perhaps you're going to put some of the wrong buildings in some places. You will end up with some ghost cities every now and then. But for every ghost city, for every Ordos that basically every documentary on Chinese ghost cities goes to, for every Ordos, you have another 19 cities that have come out of the ground in the past 20 years. And that have, and when I say 19, it's more like 200 actually, and that have come out of the ground and that now have millions of people. And so the first option is you plan ahead, and with the planning ahead, there is the possibility of mistakes, or you don't plan ahead, and then you end up, of course, with the slums that you see in Jakarta, or the slums that you see in Rio, the slums that you see in Cairo. And with the slums, you create another set of problems. Of course, hygiene, crime, lack of education, so on and so forth. So, if your starting point is, over the next 20 years, we're going to have a lot of people moving from the countryside to the cities. How do we deal with this? There's only two solutions. And the solution that basically ends up with an empty building every now and then, I think as a society is a better choice than a choice of, we end up in slums, partly because the societal costs are actually lower. You could say, well, you've got capital misallocated, but frankly, if you end up with disease, lack of education, lack of sanitation, that also has a cost, and a cost that is borne by society. So it all comes down to, what costs are you willing to pay as you move from, basically an agricultural rural society to a modern economy. Who do you want to put those costs on?
Right. So there's no doubt that China has become a modern economy and is making the shift from, the lowest cost producer to a more value add. But this is occurring in a time of kind of global strife in terms of their policies and the fact that globalization looks like it's headed in reverse. How do you see this playing out for China? Can they withstand this kind of reverse of globalization?
This is, in my mind, the single most important question today. I think to some extent, if we go back to the 2008 crisis, the 2008 crisis led to an acceleration of globalization on three different fronts. The first front was that basically global leaders, got together and put on a united front. They created the G20, and they said, we're all in this together, and let's sing Kumbaya and et cetera. So that was the first front. The second front, which I think people forget about, and that I talked in my book, I think Too Different for Comfort, was that and I think I talked about it in Roadmap for Troubling Times as well, actually, but that basically China's response to the crisis was, let's go on an orgy of capital spending. So let's build railways, let's build roads, let's build airports, etc. Before 2008, if you were producing in China, it basically meant that you were producing in Shenzhen or in Shanghai. After 2008 and China's capital spending boom, now all of a sudden you can produce in Chongqing and in Zhengzhou and in Wuhan. Now, of course, today we're waking up to the fact that there's perhaps a hidden cost to producing in Wuhan that we hadn't accounted for, and that maybe producing in Wuhan wasn't such a good idea after all. And that brings me to the third wave of globalization that came with 2008. With 2008, China woke up to the reality that having a business model that was, for all intents and purposes, 100% dependent on the American consumer and 100% on the ability of American banks to fund that business was no good, and left them essentially vulnerable. And that's when China starts to internationalize the renminbi. That's when they start opening up the bond market to foreigners. That's when Xi Jinping starts to talk about the One Belt, One Road, the Silk Road Fund, the Asian Infrastructure Investment Bank, etc. That's when China basically tries to start shifting its business model from being 100% dependent on the Western world and really the United States to basically tying up all of the emerging markets, whether Africa, Asia, Eastern Europe, into China's own economic orbit. So that brings me to answer your question. As today, it's very obvious that because of COVID, there is a rejection of China going on around the world. I think it's very obvious that we don't want to be beholden to China anymore. Having a world where 90% of antibiotics are produced in China just doesn't make sense for most countries. And so China knows that it's going to get rejected now by most Western countries. What it's trying to do increasingly aggressively is, as it gets rejected by Western countries, tie in as much as it can more and more of the emerging world into China's economic orbit, which is really the only card it has left to play. And hence, the increase of, medical help to Africa through this crisis, hence the granting of loans to a number of countries in difficulty, so on and so forth. So that's where China stands today. But however you cut it, replacing the Western world with emerging markets, A, won't be that easy, and B, it likely won't be as profitable as the trade with the Western world. So what China has to hope is that they keep some of the trade with the Western world and grow rapidly in emerging markets, which is, might happen.
Right. So when you sketch out what's going to happen to China and this shift that's occurring, where do you think the investment opportunities lie? And maybe you could talk about that from both the Chinese perspective and also the American perspective. What's going to happen to the supply kind of chains that are being focused on China, and how will they adapt?
Well, look, at the risk of plugging my book, of sounding self-serving, all right, I wrote a book about this a year ago called Clash of Empires, the main theme is we're going to move to a world where you, in essence, have three economic zones, each with their own reserve currency: the euro, the U.S., the renminbi, each with their own reference bond markets. The German bonds, the U.S. Treasuries, the RMB bonds, and each with their own supply chains. Now, if you agree with this sort of forecast for where the world is heading, the first thing that's fairly obvious is that the one asset that is massively mispriced in that environment are renminbi bonds. I mean, interest rates are zero everywhere around the world, and they're 3% in China. Meanwhile, most of the savings in the world are today occurring in the economic zones that the RMB bonds are from. So logically, if anything, it should be RMB bonds that should be yielding zero, and everybody else that should be yielding 3. So for me, the most obvious mispriced market is the RMB bond market, and I have been and remain very, very bullish Chinese bonds. And they've been a very solidly performing asset class. And what I particularly like about the asset class is how uncorrelated it is pretty much to everything else. Even in early March, when all correlations went to one, in early March, you had those 2 weeks where you were losing money on U.S. Treasuries and U.S. equities at the same time. The only asset class in the world that was going up during that period were Chinese bonds. That was pretty much the only asset class in the world where you made money. And that makes sense to me. In a world that's breaking up into 3 economic zones, nobody owns RMB bonds today, but in 5 years' time, everybody will have to. So that's for the first point. The second point, I would say, in a world where supply chains break apart, for me, it's pretty obvious that the biggest victim should be technology. Tech has been the one industry where you could say that everything has been optimized within an inch of itself. In your iPhone, you've got parts from 23 different countries. If you need to start breaking that apart and say, well, he does this and you do that, etc., it leaves tech in a tough bind. And I think what's pretty obvious to me, as we start to split the world into these different economic zones, is that in essence, the U.S. Policymakers have decided that a new Cold War of sorts was starting with China, and that the battlefield for this Cold War would be technology. That this would be the battlefield on which the war is fought, given that the U.S. has an inherent comparative advantage on that battlefield. Now, I originally come from the southwest of France, but my dad comes from Alsace. And as you know, Alsace is the part that, France and Germany kept fighting over in 1870, and then again in 1914, and then again in 1940, and then again in 1945. And let me tell you that you don't want to be along the battlefield. If you'd known in 1869 that Alsace would be fought over 4 different times with the armies trampling and the bombs and etc., you probably would have wanted to sell all your real estate in Alsace. Being long Alsace from 1870 to 1945 was no fun. If today the battlefield between the U.S. and China is technology, I struggle to see why I would want to be massively long tech.
Right. But in the meantime, tech has led the rally out of this COVID crisis. What do you think's happening? Is the market just missing it? Like, are people chasing the last year's winners?
No, I think it's something a little bit different. I think if you look at so my analysis of what's happening in the market is, well, okay, so the world shut down, panic, everything sells off, etc. Then the world starts to reopen. China is the first one to reopen. No real reacceleration. Then Germany, Switzerland, Denmark, etc. They all reopen, no reacceleration. Italy reopens, no reacceleration. So as the world reopens, you have really 3 possible scenarios. The first possible scenario is we reopen, but it's the disease reemerges, hospitals get overwhelmed, it's a disaster, and quickly we have to reconfine. In that scenario, I think there's nothing to be long except perhaps for gold. It's a bloody disaster. It's like early March all over again. So that's option 1. With every day that passes, and where it doesn't happen, the odds of that happening go further and further, fall further and further. Scenario 2, which I think is where the market was up until about 2.5 weeks ago, is we reopen, but global growth is miserable because a big part of the population doesn't want to come out, because small businesses have gone bust, because of supply chain dislocations, because this, because that. And in that environment, I'm just going to go out and buy U.S. treasuries, buy U.S. dollars, and buy U.S. growth stocks like tech stocks, because I know that these guys, I'm just going to go buy Amazon because I know that, they'll make money regardless. And I don't care about the valuations. I don't care if these things are crazy priced, because interest rates are going to stay at 0 forever anyway. So valuations don't matter. So I can, just go out and buy U.S. tech stocks. And that for me is scenario 2. And that's where the market was up until roughly, 2.5 weeks ago. Scenario 3, we reopen, and actually, given the unprecedented amount of fiscal stimulus, the unprecedented amount of monetary policy stimulus, the low oil price, actually growth turns out to be nowhere near as bad as people feared. And then then you don't need to all of a sudden shelter in the warm comfort of U.S. growth stocks, of the U.S. dollar, of U.S. treasuries. In that environment, the U.S. dollar starts to go down because people start to look around and say, well, hold on, the U.S. COVID plan has so far cost $3.7 trillion U.S. dollars. Now, to put this in perspective, $3.7 trillion, let me ask you a question. If you use it if you look at it in today's dollars, how big was the Marshall Plan? The Marshall Plan that basically helped rebuild European roads, European factories, European railroads, etc., post-World War II, which allowed, Europe to get on its feet again after, and let's call it an event that was worse than COVID.
So let's do it as a percentage GDP, and I would guess it would have been huge, like 50% plus, even higher.
No. So
right,
the Marshall Plan back in 1946 dollars was $12 billion, which in today's dollars makes it $190 billion. So the COVID plan so far has been, the COVID plan has been 46 times the Marshall Plan. To put things in perspective,
wow,
it's been 46 times the Marshall Plan with no. Have we built roads? No. Have we built any new airports? No. Have we built anything that is going to boost productivity ahead? No. All we've done is massive transfer payments. And we funded that, frankly, through MMT, through the magic money tree.
Right.
We've gone out and we've had an increase in the Fed balance sheet of almost $3 trillion so far. And so, you start to look at this. You look at USM2 growing at 22% a year, which it has never done in its history. It's never gone above 15. And all of a sudden, it's like, well, do I still want to be a bull on the U.S. dollar here? You have fiscal stimulus and monetary policy stimulus in the U.S., such as we have simply never seen in history. It doesn't make, if anything, that would make me bearish both U.S. Treasuries and U.S. And most importantly, the U.S. dollar. And I think that's what the market is starting to sense in the past couple of weeks. So you start to see the U.S. dollar roll over, you start to see U.S. Treasuries roll over, and you start to see the market thinking, well, with all the stimulus, geez, maybe I want to own energy, maybe I want to own materials, maybe I want to own industrials. And so the bull market broadens out, and you start to see a shift from what I've called scenario 2, which is this, let's huddle and wait it out in growth stocks, to scenario 3, which is, let's basically play the global economic rebound. That's where we are today. Now, you could say there's a lot of reasons to think that this shift is temporary and is not going to last, i.e. we're going to get horrible economic numbers, or the deterioration in U.S.-China relationship, or Europe is going to blow up again, or this or that. To me, all of that is just noise. The fear of Europe blowing up again, forget it. Europe has had its Hamiltonian moment. They're now doing a joint fiscal policy. It's full steam ahead. Europe as a concern should be off the table now for the coming year, unless at the June meeting you get one of the frugal four vetoing the Macron-Merkel plan, but to me that seems highly unlikely. China-U.S. relationship deteriorating. I think you saw last Friday that basically Trump intends to be all bark, no bite, and that for a week, his big Friday speech was hailed as, a lot is going to happen. We're going to make a beautiful speech on how terrible China is, etc. And that's pretty much what we got, a speech with no concrete measures on the other side. So,
right.
I come back to a very simple fact. We've just had 46 times the Marshall Plan. This is simply unprecedented.
And so you say you don't like the U.S. dollar anymore. Which currencies do you like? Would it be your commodity currencies? Is that what you would be partial to because of your inflation view?
Yeah, I love the commodity currencies today. I'm very long the Canadian peso.
Yeah.
I'm very long the Australian dollar. I think this is where you want to be today.
So you have almost the opposite view of most of FinTwit. And I was wondering if you've ever experienced, let's just say, more wise guys get it more wrong than this current rally. Like, I personally have never seen it. Very, very, like, let's face it, the respected elders amongst the hedge fund and investing community. We had Stanley Druckenmiller, Scott Minerd, Warren Buffett, all these guys very bearish, and yet they seem to have just missed it. What do you think they're missing? Is it this fiscal thing and they're just not understanding it?
No, I read Druckenmiller's interview, and I read it 3 times. And I think I think he's dead right, actually, in that, look, the big quandary today is we have a budget deficit of, $3.7 trillion. Who's going to fund this? Right now, the Fed is telling us, don't worry, I'm going to fund this. And so, yes, to your point, it's happy days. Let's all party, etc. And if the Fed, however, says I'm not going to fund this, and basically you, the private sector, have to fund it, then all of a sudden, I think when you look at the size of the numbers, it gets very ugly very quickly, and the liquidity drain that occurs in the market makes for a very unpleasant outcome. And so I think that.
So do you view that as the largest risk out there? Is the fact that the Fed steps away and withdraws too much too quick?
Yep. That as soon as the Fed starts to taper meaningfully, then I think we're in big trouble pretty quickly. So look, going back to we have this massive dislocation, and we have policies such as the world has ever seen. Now I happen to be a big believer in what Jacques Rueff, the French economist, used to say, that at the end of the day, more often than not, the exchange rate is in essence the receptacle in which all unpaid rights accumulate, and that in essence the currencies end up bearing the brunt of wrong policies. Today, I'm a huge bear on the U.S. dollar. I look at the policy mix in the U.S. And I think unless the Fed changes course pretty quickly, the U.S. dollar is set to tank. But if the Fed, but I think the Fed can't really change course. It's sort of painted itself into a corner, because if it does change course, it risks triggering another stock market crash and a collapse in economic activity, so on and so forth. So the path of least resistance for me at this point is to expect a much, much weaker dollar. And
do you foresee a point where the weaker dollar actually eventually spooks the stock market, or will it spook the bond market first?
Typically, it spooks bond markets first. Typically, it spooks bond markets before equities. Partly because I think especially the U.S. market is broad enough and diversified enough that you'll have the guys that suffer from the weaker dollar, but you'll have a lot of guys that benefit a lot from the weaker dollar. Your 3Ms and your DuPonts and all these guys love a weak dollar. And so, not to go anything about all the guys in energy and in commodities and so the path of least resistance, both in terms of policy, but also, frankly, for the politicians themselves. I don't think anybody today would be against a weaker dollar. Emerging markets would welcome a weaker dollar. President Trump would surely welcome a weaker dollar. You could say, well, a weaker dollar hurts Europe because the tourism industry is big in Europe, and when the dollar is weak, Americans don't come anymore. But let's face it, Americans aren't coming this year anyway, so who cares? There's not going to be any tourism either way, so that's a write-off, however you look at it. So there's no real hurdle to a weaker dollar here.
So if the dollar keeps going down, does the reciprocal? Do you think the stock market just keeps going? Like, is there nothing for the short run? Like, there's just nothing to stop it.
Well, I think if the dollar keeps going down, what ends up happening is the current bull market continues to broaden out. It starts to really take in emerging markets. it starts to really take in all the deep cyclicals, the commodities, etc., all of which, frankly, are very undervalued. It can keep running for a long time. Can energy stocks double from here? Sure, why not? Can emerging market stocks double from here? Yeah, of course they can. So
would you argue almost that you should be selling your U.S. stocks and going out into emerging markets? Would that be something you would?
Oh yeah.
Yeah. Like the higher beta emerging markets is what you should be playing.
Well, so that's an interesting point that you just made, because for the first time, I've been using my career to see Asia be the redhead stepchild of markets. That's, when things go badly, it's the first one to get beaten up. But what we've seen in this crisis, in this COVID crisis, is actually on the downside, Asia outperformed meaningfully. This was sort of the first time in my career that I saw, complete meltdown in global markets, and Asia outperformed. And so for once, Asia didn't have the downside beta. Latin America did, but Asia didn't. Asia did not have the downside beta this time around. And that to me is another important signal.
And so finally, let's end it with Hong Kong. How do you think that resolves itself? Like you go there a lot and you're very familiar with it. What do you think happens?
Well, look, I've lived 20 years in Hong Kong. I consider it home. I've actually lived in Hong Kong more than I've lived anywhere else in the world. So on the one hand, there's the emotional part of me where obviously you look at these developments and you think, well, this is unfortunate. And but most of my clients, they don't pay me to be a civil rights activist, and our clients don't pay us to be human rights lawyers. They pay us to figure out how to make money in these markets. Now, here was my reading. I would say I'm less worried about Hong Kong today, paradoxically, than I was 3 months ago. And the logic is pretty simple. When basically Hong Kong started to go off the rails about a year ago, the response from Beijing was dead silence. It was very clear that as far as Xi Jinping was concerned, Carrie Lam, who's the governor of Hong Kong, had started this problem, had made this crisis, and it was for her to handle it. And he basically didn't want to touch this with a barge pole. There was really no upside for him to touch this. Meanwhile, they were going to push very hard to develop Shanghai and Shenzhen as potential parallel systems to Hong Kong. So at that point, it was, the case for Hong Kong was a fairly bearish one, where you looked at it and you thought, at best, over time, we just slip into irrelevance, and basically Shanghai and Shenzhen take over all the business. And then two things happened, which I think precipitated the change that we saw a few weeks ago from Xi Jinping. The first thing was the Alibaba IPO. Now, China pushed really hard for the Alibaba IPO to go to Shanghai, and it still came to Hong Kong because, frankly, Shanghai is not nearly yet ready to be a global financial center. So that was one first wake-up call for Beijing. The second wake-up call was the U.S. Senate, the Marco Rubios, the Chuck Schumers of this world, but also President Trump, basically saying, we are going to cut off access to U.S. capital markets to Chinese companies. And we're going to basically kick off the 140 or so Chinese companies are listed in New York. Now, this raises massive alarm bells in Beijing, because if you're Beijing, you think, okay, well, we need access to a capital market. Shanghai and Shenzhen aren't ready yet. If we get cut off from New York, that basically leaves us with Hong Kong and nothing but. So we have to make Hong Kong a success. And so all of a sudden, you see Xi Jinping 2 weeks ago start talking about Hong Kong, and in essence saying, all right, this is how we're going to do it. And from now on, I own this problem. Before I was avoiding ownership of this problem at all costs, and now I've gone 180 degrees, and I'm owning this problem 100%. And if I own this problem, I need to make this a success. And that means I'm going to basically pour money into it. There's going to be tons of IPOs coming. The activity level is going to go through the roof. And I'm going to make sure that this works. And part of course, making sure that this works is that even though I'm putting in tough laws, I'm most likely going to try like hell not to implement them, because that is the final point I'll make is there's a completely different conceptualization of law as a concept between, I would say, China and the rest of the Western world. And that in the Western world, we pass laws and we expect everyone to apply those laws, and if they don't, then we punish them. In China, it's a lot looser. You have laws, and then you sort of selectively decide whether you apply them or not. The best example of this, the best example of this is the laws. In most Chinese cities, you have to be a resident to own real estate, and you can only own one apartment. And yet, everyone you meet in Shanghai has 20 apartments. And the reason for that is pretty simple: is if you start piping up, if you, Kevin, own 20 apartments in Shanghai, and you start piping up and complaining about the Chinese government, then they can turn around and say, "Oh yeah, no, we hear your criticisms. By the way, how come you own 20 apartments?" And then that's the end of the conversation.
Yeah.
And so there's a selective approach to how you apply these laws. And I think will be very much what unfolds in Hong Kong over the coming months. So, while today everybody is bared up to the guilt on Hong Kong, I look at it, the fact that Xi Jinping owns this problem actually should be quite bullish, at least in the short term. And I think, since then, for all the talk about how this is going to lead to massive capital exodus and the Hong Kong peg is going to be under pressure, et cetera. If you look at recent weeks, again yesterday, the HKMA had to intervene and sell 1 billion Hong Kong dollars in the markets to weaken the Hong Kong dollars, not to strengthen it.
Yeah.
The problem is not that the Hong Kong dollar is at the lower end of its band; it's at the upper end of its band. They're having to intervene every day to prevent the Hong Kong dollar from breaking out of its band on the upside, not the downside. And that tells you, I think, everything you need to know.
That's a great contrarian take, Louis. I think that's terrific. So listen, you were mentioning the fact that you were in Hong Kong, being the city that you spend the most time in. And nowadays, you no longer call Hong Kong your home, but you call good old Canada your home. Why don't you tell us where you are and how you ended up here?
Long story, but my wife is American. She really wanted to, after 20 years of living in Asia, she wanted to move back to North America, and obviously the U.S. was an obvious possibility, but we sort of compromised on Canada and Canada was a great compromise for many different reasons. The first and most obvious one is, of course, it allows me to fly to and from Hong Kong very, very easily. I live just outside of Vancouver. And there's, of course, a reason why they call Vancouver Vancouver. There's basically every week there's 100 flights a week from Vancouver across various Chinese cities. So it allows me to go to and from pretty easily. So that was number one. Number two, we found some great schools on Vancouver Island for our kids. My boys go to a boarding school there called Shawnigan Lake. It's actually one of the bigger Canadian rugby schools. And rugby has actually been a pretty big part of my life. I actually own a rugby club in France. It's a big part of the culture of the part of France I come from. And I was pretty keen that my boys continue to play rugby, which in the United States would have been more complicated. But in Canada, rugby is part of the culture. My take on that is, before 18, rugby builds character, and after 18, it reveals it. So I was very keen on that, and that allowed us that. And then, frankly, living here, you get to appreciate that British Columbia is, frankly, one of the more beautiful parts of the world. You can be on the same day on the beach and skiing or on the water. Frankly, nature here is about as magnificent as you'll find almost anywhere in the world. So yeah, we've been very, very happy here.
Well, that's you obviously mentioned skiing, and I'm a big skier, so we have to talk skiing. So, have you gone to Whistler yet? Like, obviously, you probably do.
Oh yeah.
Oh, sorry. You're calling from Whistler right now? Is that correct?
I'm calling from Whistler right now.
Yeah, okay.
I have a house up here. no. I'm a big skier. My second son actually is part of the Whistler freeride team, and my second daughter is part of the Alpine Club, the ski racing. So no, skiing has become a big part of our lives for sure.
So I just figured it out. That means you have 4 kids.
I do. Yeah.
you're like Patrick. You guys, you're keeping the generations alive. So how do you find the skiing in Whistler versus the skiing out in Europe, where you grew up?
Yeah. So I think Whistler has 2 massive advantages compared to pretty much anywhere else in the world. The first, and that's especially true if you like to go out of bounds and do some fairly hairy stuff. The first advantage is that the snow here, because we're so close to the sea, is much heavier than pretty much anywhere else in the world. So there's a reason they call it the PCC, Pacific Coast Concrete. But the fact that it's so heavy allows you to ski very steep stuff, and stuff that frankly you wouldn't be able to ski in Europe because the snow would just fall from underneath you, right? So the fact that the snow is heavy, you can ski some really heavy, some really steep stuff. The second thing is, because it's a low altitude environment here, you can go off piste without having to go on glaciers, and so you don't have to worry about crevices. When you're off piste, really the only risk you have to worry about is the avalanche risk. Meanwhile, in Europe, the crevice risk is a very strong risk. And when I was in the Army, I was actually in mountain infantry, so we spent our whole time in the mountains and skiing up and down, and a lot of backcountry skiing, etc., which is the part I enjoy the most doing here in Whistler. And frankly, the backcountry terrain here is just magnificent. Of course, the big risk in Europe, if you get a little lost, you just keep going down, and at some point you'll hit a road or a village or something. In Canada, you get a little lost, you keep going, you end up in the middle of absolutely nowhere, because as soon as you get off the beaten paths, there's just nothing here. It's nothing for thousands of miles.
So you were in the infantry, like the mountaineering portion of the military. So were you one of those guys in white suits that? Oh,
yep.
Like the guys that chased,
like
the guys who chased,
like the James Bond
chased. Yeah, that's awesome. That's great. I'm a big backcountry skier as well. Like we go cat skiing. We used to go for kind of 20 years. I would arrange this group of guys from Bay Street in Toronto when we would go to Revelstoke or to places outside Kelowna. And have you had a chance to go do any heli skiing or cat skiing yet in BC?
Absolutely. Absolutely. No, I've been on a bunch of trips. I've done a couple with CMH, one with Micah. I was actually supposed to do a cat skiing trip just outside of Revy this year before the whole. We're supposed to do it in late March, and then the whole COVID thing, of course, put a kibosh to that. But no. So I've skied the interior. I've gone around the interior both, for myself for fun. But increasingly I'm doing it for competitions for either my daughter or my son. It's skiing. I tell you, skiing with the kids. It's these competition. It's really thankless. You drive 8 hours for your kids' competition. They race for a minute, and then you drive 8 hours back. It's pretty awesome. There you go.
That is a lot of work. Especially in Canada, where the distances are always so large, right? Like I always kind of think it's funny when Europeans come over across Canada and they say, let's drive across the country, and they're not realizing that it's going to take days to do that. I got one story to leave you with that I got to tell you, because you mentioned Revelstoke. And when we first started cat skiing, it was actually the Revelstoke Mountain that is now an actual resort was a cat skiing operation. And so we used to go up there and then come down. And the last year we were there, they had actually had already sold the mountain, and they were cutting out the section for the gondola. And it was the last day, and we'd been going many years. And the guide said to us, he says, "You want to ski out the gondola run just because this will be your last time." So we said, "Oh shit, whatever, let's go for it." And it was the 5th day. We were tired, and it was kind of lower terrain, so the snow wasn't as good. But not only that, it was cut through the mountain, so it was really narrow and steep and ugly. And we just got chewed up something fast, like terrible. Like it was just like yard sales. We were making a mess. People.
Any injuries?
Thank God. Yeah, no, I was going to say, thank God no one got hurt. And one of my buddies said, and it was mostly investment bankers with us, and it was a few traders, but there's investment bankers. And one of the guys said, "What are you going to call this run? Kill the banker." And the guy said, "Oh, that's really funny." And then, you know what?
And it's still there.
They named the run Kill the Banker. Oh, you know the run. Yeah, so that's actually named from us. We were skiing that run, and that's how that was named.
I love it. All right, well, next time I'm there, I'm telling everyone I know. No.
Okay.
I was there. I was at Revy earlier this year because my son had a comp there. What a terrific mountain that is.
The snow is unbelievable. It's actually world class. The snow. It just the reality is it's in the middle of nowhere. It takes forever to get there, either from Vancouver, even Kelowna is a long way, and the other side, Calgary, you got to go through. You got to go through the what's the pass, Rogers Pass or whatever, and there's always avalanche dangers and stuff. It's a little bit of a disaster. If it was in a better spot, that would be just one of the best mountains in Canada.
It's such a big mountain, so much terrain. I absolutely love Revy. But yeah, to your point, it's just a pain in the neck to get to. All right, so Kill the Banker.
Is ours.
I'm going to call it Kevin's Run from now on.
Okay. Well, listen, thank you so much for being with us today. I'm looking forward to when this COVID's over of coming out and skiing with you and getting the young people to show us how it's done.
I'd love that idea. Let's make it happen.
Okay. Sure. Thanks again. Take care. Have a great weekend.
Thank you. You too, Kevin. Bye.
So we brought back Louis because I realized that I forgot something. And it's actually very, very near and dear to my heart. And I wrote this piece, and Louis kind of reached out to me, and it was about Bobby Orr. And he said, Bobby Orr is actually a really nice guy. I roomed with his son in college. And I said, holy shit, you were like one step away from greatness. We have to talk about Bobby Orr. What was it like rooming with Bobby Orr's son?
So in college, one of my fraternity brothers and roommates my senior year was Darren Orr, Bobby Orr's son. And what I didn't realize back then, being a farm boy from France, I didn't realize hockey in France is not really on the radar. I actually didn't realize that this was actually the highlight of my life. I only realized it once I moved to Canada. That having Bobby Orr come down to the fraternity house and have beers with us and hang out with us was the highlight of my existence. It only struck me 20 years later, or 25 years later, once I moved to Canada, what luck I had. And as they say, youth is wasted on the young, right?
That's right. Did the Americans appreciate it, or was it just you that? Oh, the Americans understood how important this was.
The Americans understood. Another. We had actually a couple of guys from Boston in my fraternity, and they sure as hell appreciate it.
For sure.
So no.
Is he as nice a guy as he seems? Is he as nice a guy as he seems?
Very much so. His son Darren was lovely. And so was Bobby, of course. So he would come down every now and then, but by that point, I believe he actually wasn't drinking anymore. So we were having beers, but he wasn't. But he was definitely hanging out with everyone, and always very generous with his time.
Oh, that's terrific. As a Canadian, that's, to me, I grew up, and Bobby Orr was always the hockey player that we all loved and wanted to be like. And I guess, I come from a family of defensemen especially. And so Bobby Orr was always the quintessential defenseman, and he always just seemed like such a good guy. And even now he just continues to represent our country with grace. And and we just love him to death. And I just wanted to chat with you about it because I just said to myself, here's a guy that actually was with them, and we couldn't let that story go by. So thanks a lot for filling us in.
Well, we moved to Canada a few years ago, and obviously Canada's already rubbed off on my boys because I was telling this story to my boys just recently, and they thought I was pulling their leg. Actually, they many generations past Bobby Orr, but still they realized, oh my God, you actually hung out with Bobby Orr. So I went up in my son's esteem considerably.
That's great. They're turning into true Canadian boys.
Exactly.
Well, anyways, thanks again, Louis.
Pleasure.
Okay, take care.
Talk to you soon.
Have a great weekend. Lena, hop on.
Hello.
So Patrick is unfortunately not with us.
Right. You
but
lost your wingman.
About it. I lost my wingman. I was thinking about it. What do you say about getting Taylor on?
I think we should. That's a great idea.
Okay. Taylor, you up for it?
We're just going to put you on the spot.
Let's do it. Yeah, well, thanks so much. Long-time listener, so I'm just happy to be here.
So let's get our beers. What is everybody drinking?
Well, I'm going to go ahead and let everybody know that I am officially out of alcohol and not even a mouthwash left anymore. So I've got a bubbly sparkling water strawberry flavor.
Oh, that's not good. So Patrick had promised us he's going to get his beers. He fell down, but we're going to give him a break this time.
Right. Just this time, though.
Right? Yeah. And so, Taylor, what are you drinking, bud?
I'm doing a pink grapefruit sparkling water. Yeah, it's getting pretty wild on a Friday night. So
I tell you, I get two millennials on the show, and this is what I get.
Oh, that's a drinking game. Somebody had suggested
Oh, I know.
we should
I said
have a
it. I'm
drinking
sorry.
game.
I got to stop it. Okay.
Every time
so
you
listen,
say a millennial.
I'm not going to say it anymore. That'll be the last one. I'll tell you what I'm drinking. I was stuck, and I also was running out of booze, so I went and raided my daughter, my university age daughter that had some booze left over, and guess what I'm having?
Oh my gosh, what are you having? Some
Cooler.
sort of
it's almost like that. It's the Claw, the White Claw.
Oh my God, the one that everybody's been drinking lately.
Yeah, there ain't no claws when you're drinking the claws. Oh, I screwed that up. There ain't no laws when you're drinking the claws.
Is it any good?
Many. No, it's terrible actually,
okay.
But it's booze.
Oh.
Well, let's get to it. Let's go do the disclaimer.
Yeah.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decision regarding topics mentioned in this show. Side effects of too much huddle may include slack limps, Eurobund bloats, and one of my favorites, yield curve yeets.
I think you have all three, no?
Yeah. Okay, joining us now is our old friend Kuppy, and we missed you last week, and some people were worried about it, Kuppy. I actually got some frantic emails and Twitter messages saying, "Where's Kuppy? Is he okay?" You were kind enough to send us some pictures from your vacation that you're sharing with us now.
Yeah, I mean, they just couldn't sober me up in time for the podcast.
So Lena was telling us that she got some feedback that you look like a tanker pirate.
Well, I haven't had a haircut in about 3 months, so it's got a little bushy up there.
Yeah. So what is this drink you're kind of attempting to eat/drink? Because it looks like it's more of a meal than a drink.
Well, it's a Bloody Mary, but they found a way to add another about 2,000 calories to it. I mean, it's got shrimp, it's got bacon, it's okra. I mean, whatever you could put into a Bloody Mary, they found a way to put it in.
It's nice. So where was that? Where were you vacationing?
I was at Cedar Key on the west coast of Florida. It's one of the small keys a little north of Tampa. But my wife and I said, screw this. I'm not going to miss my whole summer. The beach is closed here when we went up to the Panhandle because the beach is open there. And it's very different because I haven't really spent much time there. But we rented a place for 3 weeks right on the ocean, which is great. No one's wearing masks. No one cares about this flu. Everyone's out, shoulder to shoulder at the bars. There's no restrictions. It's just a great place to be and a great place to hide out, I guess, the flu and now the riots.
Right. So you were checking out your St. Joe's investment?
Yeah, I own some St. Joe's. I was checking it out. They're doing great.
So it's not all swamp. It's not all swampland beside the airport.
No. It's the Hamptons for Georgia and Houston. Look, I sold some calls against it up here at 20 because I don't know. I think it's got another year or two before it really blossoms, but that's going to be a good one. It's one of those dead money until it's not, but it's going to be a good one.
Okay, so let's talk about what you're doing here. And you and I have been chatting, and me being a Canadian, I can't really appreciate this next investment thesis. But why don't you tell me what it is, anyways?
Well, I guess just out of curiosity, I mean, what'd you get around to stealing during the riots? Did you get any, like, flat screens or anything?
No, I didn't get anything. I'm sorry.
You Canadians are too polite. You'd probably say please and thank you while you steal it.
That's right.
Well, I'm thinking of rolling out a platform called Looting as a Service, LAS. I think this is like a multi-billion-dollar IPO idea. You put down what you want, you put down when you want it by, and you put down what you're willing to pay for it, and anyone on the other side can just go steal it for you. You know, and whoever gets it to you first gets the commission. It's like a reverse Uber in a way. I think we can take this thing public. Look, you know, when I run out of printer cartridges, I mean, it seems dumb for me. I'm a successful hedge fund guy. Like, I'm not going to go steal it myself. I should let someone else get that opportunity to earn the commission.
That's right. I did see that in New York City, some guys were driving around in $200,000 Mercedes doing the looting. Now, it was unclear whether they had actually looted the Mercedes as well, or if they were guys that owned $200,000 Mercedes that were doing the looting.
Good for everyone.
So maybe the hedge fund guys were more busy than you think.
Could be.
Yeah.
Well, so let me talk about my thesis. And we're a bit, probably third innings in this play now. But on Friday, I saw what was happening on the news. I told myself I wouldn't trade anything while I was on vacation. I really didn't. I cleared out my whole event-driven book. I cleared out my trading book, kept my longs, my core book. But I just enjoyed the beach and enjoyed non-lockdown. But on Friday, I saw what was going on with the riots and the looting, and I said, everyone's going to buy a gun. Like, guns are just going to be the thing. And I bought a decent position in some of these companies. I actually tweeted about it Thursday night. I was creating a new ETF called Loot, L-O-O-T. Yeah. And I just kind of created it on my own balance sheet. But I bought all the gun companies, your Rugers and your Smiths and your Vista brands. And I bought some of the little Pico cap frauds like Digital Alley. And, I own some POW. I own this is one I really like. Ticker's VTSI. I'll let other people, it's a small cap, so I'll let people do their own due diligence on this. But all you need to know is that they offer simulations where officers can get trained on how to de-escalate violent situations and tense situations, and they set you up with a simulator. And you basically go through various scenarios, and you simulate how to diffuse a situation. If that doesn't sound like the stock that Robinhood wants, I don't know what is. Right. So I built my basket of this stuff. And look, they rioted all weekend. They burned most cities. These things gapped open a ton. I took a little bit off on the open, and then there was a pullback, and I just doubled and tripled because I think this riot thing is going to be a trend for a while. It'll kind of cool down for a bit, and then someone else will do something retarded, and it'll flare back up, and then it'll come back down again. But what really got me thinking I need to own this thing is a bunch of my liberal friends in New York, and these are your typical libtards that they hate guns, they hate progress, they hate capitalism almost, but they're good drinkers. They gotta have something in common, right? But right. They started calling me up. They're like, "Hey, Kuppy, do you know where I buy a gun?" And I'm like, "Don't you guys hate guns?" And they're like, "Yeah, but I have this like weird philosophical problem because I hate the cops more." And I still like my own, but I like my own personal possessions, And so I don't really know how to square this. What do I do if the riot comes to my house? And I think I need a gun. And I'm thinking, wow, you have about half the population that is pro-gun here. And suddenly the TAM just expanded. And a lot of those guys, those blue states, I mean, they have a lot of catching up to do if they're going to own even a fraction of the guns the red states got. And I mean, look, like in Long Island, some friends, I'm from Long Island, friends are sending me pictures like this 5-hour waits to go buy a gun. Come on. So, yeah, really? I'll send it to you. Yeah. It's crazy. My parents are talking about getting guns. My parents hate guns. So it just got me thinking that, you look at Ruger and it's up 10% from pre-riots. And I think the demand for guns is up a lot more than 10%. And I mean, Ruger, I don't want to go too deep into the fundies, but look, it's got almost $10 a share of net cash, a $70 stock. Look, it's like 10 to 15 times pro forma earnings net of cash. They have no debt. And I mean, that's pretty cheap for a branded CPG with a really high ROE, 10 to 15 times earnings, especially if you see a lot of growth come out of it. Most of these CPGs grow like 2% a year. I mean, I could see Ruger top line grow 200% this year. I mean, 15 times seems the wrong price. I don't know. This is more of a put it away and forget it until the election sort of thing than a day trade. But I own a whole lot of guns and ammo.
God. See, this is, as a Canadian, it's just so alien to me, that the idea that you would go buy a gun. And I guess if I had those riots happening around me, I might be thinking about it as well. But we're not going to talk politics because, it just seemed to piss everyone off. So why don't we talk about what this means for the market and how this, how this will play out in the coming, 6 months? You mentioned that you thought it was going to continue. You don't think this is going to get better?
The riots?
You think the worst? Yeah, you think the worst is still ahead of us?
Yeah, I really do. I mean, look, you look at the stages of these sort of things, and I see this as more of like a little closet revolution than just, some guys blowing off steam, torching some stuff. If you look at how these things progress through time, so far, it's the Blues that are burning their own cities down, and the Reds are kind of sitting at home and being like, ha ha, you guys are idiots. And, the next step of this, I think, is that the Reds get engaged. And, look, you got a lot of idiots on both sides. You just need one or two Reds to do something really, really stupid. And then suddenly it's a red on blue. And I think that's where this thing is heading towards, which is why I'm so bullish guns. I mean, we've already seen that the cops pretty much are into beating old ladies and, doing nothing to actually, diffuse things. I just think it's going to get worse. And as I said, there's going to be good and bad periods. And I think it's going to be a couple of year process. But no, I think gun stocks would be very good. And I don't want to get too deep into the politics of this because, it's just going to piss everyone off, like you said.
Right, agreed. But okay, let's talk about the market, ramifications of your forecast. Do you think that means that foreign investors will basically de-weight U.S. equities and U.S. assets?
I don't know. Yeah, probably. I mean, if you have riots in the streets, it's probably not, the sort of thing that foreign investors like to see. But look, in the end, the way you're going to shut the rioters up is you're going to give them free shit. And, there's a lot of them that really aren't very entrepreneurial and couldn't manage to steal stuff. So you're just going to give them, cash handouts. And, I think it's just going to be very inflationary. And I think you're going to see a lot of fiscal here. And it's going to be fiscal. If you look at the last round of fiscal, is mainly targeted at large U.S. corporates. I'm talking about what happened in March and April. And then, the small business guy got a little taste of it through the PPP, but, it really wasn't much. It mostly went to large insolvent corporates and banks. And, the next round of fiscal probably goes to consumer.
Do you think we're going to have another round of fiscal with the good unemployment numbers that we had today, like in the stock market rolling to new highs?
So I think you have to disassociate stock market at new highs with 30 million unemployed and riots in the streets. Stock market in Venezuela made new highs for a decade, and they had no food.
Good point. Yeah. No, good point.
And Venezuela did fiscal in a ridiculous way, and I think we're going to do Venezuela light here. I think anyone who's short SPOO is just asking for it. It doesn't mean you have to be balls to the wall long, but I really don't think you should be short. I think, I don't know. I mean, a lot of me says the market wants to roll over and die, but because the economy's hurting. And then part of me says they're just going to keep printing. And, what I've been doing with my own book is I've been I'm a small cap. We own a lot of small cap. I don't talk about that much, but I've been trailing out of a lot of this small cap of liquid stuff because I want to be in big liquid names I can move around in. I'm just trying to get positioned and strategic. I did that in January and February, and I got lucky that I had a bunch of cash, and I'm just laying out of that stuff, but I'm keeping the big liquid stuff because, I want to be able to play ball.
Right. What I find fascinating is the fact that a lot of the older, wiser hedge fund managers, the Scott Meinerts, the, Stanley Druckenmillers, even Warren Buffett were selling. And then meanwhile, you got this whole new generation of young people, the Robin Hood that you mentioned, the Robin Hood.
Davey. I love Davey.
Dave Portnoy. Yeah, listen, he's great entertainment. Like, he's just unbelievable. But but watching him and the arrogance and how, like, you were saying you don't need to be balls to the wall long. Well, this guy is balls to the wall long, right? Like, and it's fascinating what's happening.
But he's the Buffett of small cap. He's the Buffett of Ponzi sector. He knows how to buy fraud better than even Crazy Kathy. It's just amazing to watch him. I mean, the guy's just awesome at this.
Yeah, he's pretty hilarious. Did you see the video where he started to figure out that he was moving stocks?
That was one of the best moments in all of finance. He's like, I did that. I moved this thing 30%.
Yeah. Anyways, the Portnoy is just he is an unbelievably hilarious guy to watch. But how do you think this plays out? Because you have to agree that the Druckenmillers, the Buffetts of all these other guys are, whether they're not long or they might even be short, and they're sitting there preaching caution, and yet meanwhile everything is rallying higher. Do we need to see a situation where they finally give in and go out and buy it and give up before this thing rolls over?
I don't know. I mean, look, SPOOs are up 90 handles as we're talking. Clearly, someone's given up and just buying it. I think a lot of these guys have an old framework where, fiscal was 1-2% a year, and that was like a big year. And fiscal's going to run what, like 30% this year or something nutty? Like I don't think people have a framework for what that means. Everyone's saying this is a one and done. Look, the Republicans are supposed to be the fiscally conservative ones. Imagine if you have a Democrat in place, all bets are off. I just don't think a lot of these older fellows have the same framework. And look, I want to sell them like everyone else. I mean, I think it's ridiculous, but I don't know. They could just keep printing us higher. You put out a very good alert today a piece today in terms of who's printing and what their markets are doing. I thought it was great. Yeah,
well, thank you. The Japan just astounds me. They do 20% monetary stimulus, and then they do 40% of GDP fiscal. And we're the U.S. is 30 or whatever. These numbers are just huge. Like, they're just monstrous. And I agree with you that a lot of the managers haven't really clued into what that means. And one of the things I think about is this a situation where, like in 1981, when inflation was running hot, and then Volcker came in and raised rates and changed the whole dynamic, there was those strategists that stayed there and they kept predicting more and more and more inflation, and they never gave up. The Henry Kaufman's of the world, Dr. Doom. And I'm wondering if these guys that are sitting there predicting kind of a deflationary collapse will be the Dr. Dooms of this generation.
Yeah, I don't know if Buffett's predicting a deflationary collapse, but he's just saying everything's overvalued. And I'm saying, who cares? It might just go up. I'm not saying that's my, best guess what's going to happen, but Venezuela just went up. Hey, by the way, quick advertisement. I'm a fully paid up subscriber to Macro Tourist and love it. Everyone should subscribe.
Well, that's pretty kind of you, Kuppy. Very kind.
But fully paid up. I think I was client number one, so I love it. But yeah, look, if you look at how I'm positioned, thank God I sidestepped the crash in gold here because I blew out all my trading positions when I went on vacation, not because I'm smart.
To be fair, Kuppy, you were actually, I remember us chatting and you were getting worried about gold. And I do remember that you were concerned about the gold, and you're not giving yourself enough credit in terms of your trading acumen. And so let's talk a little bit about gold. Do you think that this is just the pause that refreshes, or do you think it could go a lot lower?
Okay. I don't know. If gold went down $100 next week, what is that? It's a couple hundred basis points. It'd be like 5-6%. I don't really know. Gold is one of those things you want to own because you want to own it. It's not really, I'm terrible at guessing which way it goes. I think you made a great point though that, we had, 3 or 4 trillion of money printing, but now we're running these giant deficits and QE's slowing down a lot. And it's actually kind of, as we run these deficits, first they put 4 trillion out there, and now they're basically bringing it back in a way in terms of liquidity because you're putting these bonds out there from the Treasury, and investors have to buy them. So it's actually pulling liquidity away from the market. And I think gold was smelling that. Like I was texting with you when I was at the beach, and I was just saying, if gold can't make a new high with everything that's going on in this world, then I don't want to be on board. And it dropped like $70 right after that, but.
Yeah, it's basically, and the bond market as well was sniffing out this big monster number that we had in the employment, right?
Well, I think the bonds are just looking at Trump talking about another trillion of fiscal, and they're saying, "What the hell is this?"
Right. And not only that, imagine if this economy gets going faster than we expect, which I think is also one of the things that's happening, is that the market is realizing that this isn't the reopening is occurring faster than everyone expected. Would you agree?
Yeah, no. I think we're going to have, let's see, you have a couple narratives playing out, okay? The big narrative in the markets is still Project Zimbabwe. That's the big narrative that everyone needs to focus on. You got this COVID where everyone's kind of coming to the conclusion it was a giant hoax, offset by the fact that 30 million people lost their jobs, and those jobs will take a decade to come back. You're not going to flip the switch and the job comes back. It's kind of this chicken and egg. You want to reopen your restaurant and hire 25 people, but your restaurant's going to be at 10% occupancy on day one. So you can't hire the people and you can't open the restaurant because you have no customers. But you have no customers because you're not paying 30 people a salary to go out to the restaurant across the street. It's going to take a very long time for this to reboot. And they're just going to keep going with Project Zimbabwe there. I think we're going to hit a higher level in terms of utilization, whether it's hotels or airplanes or restaurants, but it's going to be a lot lower than where we were in January and February. And I think a lot of those businesses will be structurally unprofitable. And it's going to be a scary moment to realize that you're structurally unprofitable and you're comping, forward month over month, single digits. So you kind of realize you won't get to profitability before you run out of working capital, which probably leads to more Project Zimbabwe. If you look at where I'm positioned, I got a huge position in these gun companies. I got a little bit of energy left over. I own a ton of tankers, and then I got some crypto and I got a little bit of coal. I mean, that's my book. It's a pretty concentrated book, and I'm a little over 100% long here, but I'm long stuff that does well with volatility.
And so let's talk crypto. You are
God, the dots in the sky.
Yeah, the bits of the bits of the cloud. Yeah, so you're the first one to say I don't know much about it, but I can smell a bubble coming, and you've been long, and why don't you walk us through your reasoning for that and what you're thinking is going to happen?
I'm going to show you how little I know on the topic. I own some Bitcoin. I own some Bitcoin futures. Look, the chart looks pretty sexual. It's been consolidating just below 10,000. It's got, I mean, I'm a chart guy at heart at the end, and look, it's been a 2-year consolidation. It looks cup and saucery. It's making a little pennant-looking thing, saucer handly looking thing, just below 10,000. Stuff usually consolidates below big figures. Yeah, I get it. It's hilarious, right?
No, it's good. It's good. It's looking sexy in all this chat. Where we need Patrick when you're doing all this this technical analysis. Okay, so basically, you like the chart of the Bitcoin.
Yeah, look, I own some of the futures. I don't want to deal with settlement and custody. I already had mine stolen once. These are cash settled. I'm just going to let it happen off a reference price. But then my real position, I own some Galaxy Digital. I talked about it, I think, a month or two ago when it was trading about $1. It's about $1.70 right now. That's
the Novogratz holding.
Yeah.
It's company.
Yeah, it's a holding company. You're buying a bunch of Bitcoin at 70 cents to the dollar, 60 cents to the dollar. So I assume he knows how to custody it better than I do. But then you own some VC stuff. They do some underwriting. They've done 2 IPOs so far. They do some M&A. They've got a VC fund where they're going to earn some fees. They've got a Bitcoin hedge fund where they earn some fees. Right now, they've pretty much lost money every quarter they've done this startup hedge fund, merchant bank, investment banky thing. But it kind of smells a little like U.S. Global. And I mean, the greatest investment in the history of my life is U.S. Global. Stock went from $3 to $70 during the gold boom. And they just owned mutual funds. They had some hedge funds investing in mining. And as the AUM went in, the fees went up. And as I said, it went from 3 to 70 and pretty much made my career. And so this kind of smells similar.
Yeah,
so
I like that. Is, for those who want to know, that's GLXY, and that actually trades only in Canada. So
please, no one accuse me of stock promotion. It's $1.70, so it's below my threshold of little stocks I talk about. But
listen, Micro Novogratz is like, it's not you're not promoting something when it's the Micro Novogratz is actually doing the real promotion in that thing.
Well, he hasn't really promoted it much because the company bought back like 5-6 million shares during this whole crash. And then he bought a few $1 million personally. I think he kind of wanted it cheap so he could buy it all in. And he bought in a good chunk of the float between him personally and the company. And I mean, they were buying this stuff at like 30, 40 cents on NAV. And mind you, NAV is mostly Bitcoin. So he was doing this when Bitcoin was, 6,000, 7,000. Now Bitcoin's 9,800. So I don't know. It's a way to own Bitcoin and maybe get some special sauce on the side. And like when I owned my US Global, it was really good for me. I came into that company when they had about 500 million of assets, AUM, and I sold mine when they had about 6 billion of AUM. And as you can imagine, you get a lot of operating leverage out of that. So I don't know. I mean, I'm just trying to be levered long to money printing, levered long to volatility. That's my tankers and my guns. I don't think there's going to be like a smooth ride up like it has been the last decade where, SPOOs go up 100 bips a week every week, and then you have a down 3, and then it just kind of goes back on the treadmill. I think this is going to be really, really floppy and volatile, and you're going to have lots of movement, and you're going to want to be in liquid assets. But I think, honestly, you're probably going to have a pullback and a correction at some point, but Project Zimbabwe wins out over everything else.
Project Zimbabwe. Okay, is there anything on your horizon that you're like wishing you could buy today that you're just thinking, this is what I want to own, it's just not cheap enough?
I got a few of those where, so when coming out of the crash, I bought the low. I just got the no. You and I, we got the low. And then a lot of these things doubled, and I'm like, oh, that was awesome. I doubled my money in like, 6 days or something, and I took a bunch off, and then I rode the other little bits, and it doubled again, and I'm like, I'm gonna sell some calls against this because implied vol is 200, and they all got called away from me in April. and then they doubled again.
Kuppy, by the way, you might have bought the low. I bought it too early. I'm sure I was offside for a while. But anyways, yeah, so this is the problem with it when you're selling calls, that you give up that monster upside, which I would have never thought that it would have been this violent to the upside either. I would have thought that we would have consolidated, but we haven't even consolidated. So you got some stuff taken away from you. What are the names that you're looking to get back into if they were to pull back?
Oh, I'd love to buy some St. Joe at 15 again, 16. I'd love to, I don't know. There's a lot of consumer stuff I was in. I mean, look like Brunswick. Okay, that was at $25. That's a duopoly globally. I sold mine in the 40s, and we're at the 60s now. I feel stupid, and I mean, I made a lot of money, so I don't feel that stupid. But I left a lot on the table.
Right. So it's just I almost wonder sometimes if you should just be buying these names and shorting S&Ps against it. This is one of the things that I thought about. Like,
Nah, because you'd end up in the situation where you're short SPOO and your tankers go nowhere. That's like suicide.
Okay, so listen, give us one last update about the tankers. Anything new to report, or you just still love them and you're waiting for the market to finally wake up and realize what a great investment they are?
I still love them. I mean, look, I've done this for over 20 years now. I've done one thing and done it really well, which is find a cheap asset class that has a strong macro tailwind, get there right at the inflection and ride it. And I got into these tankers really Q1 2019 at a time when they were losing a ton of money. Everyone thought that they were just terrible and toxic. I got into them at large discounts to net asset value. I called the turn where by Q3 they were making a ton of money. The stocks had a really nice rally in Q3, Q4. And then, they've literally continued to make a fortune and just no one cares. I mean, let's pull up my biggest position is a company called TK Tankers. Right. It's got a 570 million market cap right now as we're talking. They earned $450 million between Q4, Q1, and Q2 that they're going to report in 2 months. So they've earned 3/4 of the market cap. It just doesn't make sense. These things really shouldn't trade at these sort of valuations. I figure NAV is probably low 30s right now on a $17 stock, and probably by year end it's like mid 30s. And if you get a spike in rates from here, you could be high 30s. It just doesn't make sense.
So you say it doesn't make sense. So, Kuppy, what do you think is the other side? Why don't they make sense? Do you have any theories on this? Why is the market hated so much?
Because you could buy Bankrupt Luck and Coffee, and it's up 5 times this month. You could buy Chesapeake, which is bankrupt. You could buy Hertz, which is like actually bankrupt, and you could have tripled your money this week. Why would you waste your time on something with earnings?
So what we need to do is we need to get the Robinhood traders get into the tankers.
Yeah, I need to drive up and go talk to Davey Trader and get him to learn about tankers.
That's right. He's in Miami, right? Like he's
in Fort Lauderdale.
Oh, okay. So there you go. Well, anyways, Kuppy, it's been great having you. You got your assignment for next week. Go visit Dave Portnoy and get him to pump those tankers.
Sounds good. Looking forward to it.
Okay, thanks a lot. Thanks for coming. Take care.
Hey, talk
Stay
soon,
safe.
guys.
Okay, time for This Week in Trading History. Taylor, you are the brains behind this operation. You actually came up with today's This Week in History. What do you have for us?
Yeah, so I thought this week we talk about when FDR took the USA off of the gold standard. But before we launch into the history of this, I just want to start it off by saying that as the token millennial of this show, it seems foreign to me that the US dollar was ever pegged to any real tangible thing. Like, for me, having only ever known the fiat system, it seems like it's normal to say something like, yes, I'd like to pay for this e-bike avocado toast with a promise paper from Mr. Powell, but, he swears he's good for it.
The only thing that would be even more comfortable for you, Taylor, would be paying for it with bits in the sky.
Yeah, exactly. Like we spoke about a couple weeks ago, the halving. Yeah.
Right.
So let's get into this. The gold standard is a monetary system where the currency has a value backed by gold. So this can either be in the direct trade of gold changing hands or indirectly with paper notes that represent a claim to gold. So this gold standard is no longer used by governments. So let's just get that out of the way. And although most countries still keep stockpiles in their reserves, right. Britain stopped using it in 1931, then followed shortly by the US in 1933. And for all you gold bugs with gold tinfoil mega hats out there, no, Trump isn't planning or rumored to be bringing back the gold standard. I don't think that would work right now. I just want to. I know
that's always it. It's always one of those ones that the gold bugs, bring out. They say he's going to go and he's going to peg the dollar to gold, and I always say no, he's not, because that wouldn't allow him to devalue it as quickly as he wanted it to.
Yeah, exactly. So the history of it is that, like, alternative representations of gold as currency really began to heat up and take form during the Civil War of 1861. Before then, paper money wasn't actually legal tender, and even though a variety of notes were circulating. These included private bank notes that fluctuated in value based on the distance from and the confidence in the banks that issued them. There was some treasury notes circulating, which promised to pay gold or silver at a future date with interest. And also in large transactions, there were bills of exchange, which were essentially endorsed IOUs that companies could trade with each other.
Wait, IOUs, I know something about that. I think there's a certain partner of mine that owes me something, and I have a few IOUs on burgers and bets. Right?
Yeah, I've heard. And I guess keep a track.
Yeah. Well, I guess that's just, we're going to give him some digs, because that's what happens when you don't show up. We get to remind him of all the bets that he lost.
So redeeming these paper for gold actually presented some major problems for the bank reserves during panics. And couple that with the added fiscal pressures of the Civil War, and you can start to see how the move towards a fiat system was actually sort of inevitable. So this fiat monetary system is based on the confidence in the government issuing the notes rather than the worth of the commodity backing it. So the government trialed this paper system in 1862 when they first declared a non-convertible note as official legal tender, and that was called the greenback. So this operated well throughout the war, even though there was some inflation. And then came along checks, which was another monetary exchange, you could say. So the system of checks actually suffered the same fate as gold and the same issues as gold, because during these liquidity crunches, like around harvest time or panics, reserves of notes and greenbacks would run low, and that would cause banks to fail. So in 1913, the government created the Federal Reserve to help protect this. So the Fed acted both as a lender of last resort and the creator of their own interchangeable Fed notes. Not only did they abide by the gold standard, but they were actually in charge of maintaining it.
So, Taylor, this is the point when all the doomsday or zero hedge type guys say that the world really went to hell in a handbasket. that 1913 when the Federal Reserve was, created.
And not to be a saucy boy, but what was it like reading that in the news?
I was upset. I was very upset.
Okay, so that was the historical context of the gold standard. But this is when it really gets interesting, because here comes the actual power moves of by some of the major players. So the crash of 1929 caused a wave of panics and runs on banks and subsequent failures from 1930 to 1933. So during this time, even the Fed couldn't provide enough cash to the banks, as they had to maintain their old gold reserve ratios. And they were put in place to help protect against all these failures, but they couldn't. Because even if they wanted to supply huge sums of cash to support the banks, they would have needed to lower interest rates, which would have increased gold exports by investors who could then get higher returns abroad. So this would have been a nasty feedback loop for the government, because by creating huge amounts of paper money, people would begin to doubt the US's ability to actually remain on the gold standard. And the more the greater these doubts, the greater the incentive was for investors to export their gold abroad, and that would reduce gold reserves and actually make it a lot harder to maintain the dollar at its legal gold value. So hence, to keep the economy from collapsing, the Fed needed a policy of expansion. But on the contrary, to stay on the gold standard, it needed one of contraction, which it did need to maintain up until FDR won the presidential election in 1932. Now, Kev, I'm going to need your help on this one because we're coming up on Keynesian economic theory.
Yeah, well, you young people don't know about that. You're all into the MMT and stuff like that. Not only that, you can't. I remember Keynes. We drank beers together.
Well, according to that theory, one of the best ways to fight off an economic downturn is to inflate the money supply. So increasing the amount of gold held by the Federal Reserve would do just that. And in the years leading up to his presidential campaign, Roosevelt watched Britain inflate the debt away scenario actually play out. And he was taking notes because he wanted to make some moves of his own. So we're getting to it. Here it comes. I promise. So after winning the 1932 election, FDR started the process. He issued an executive order that suspended the converting of notes to gold. He then declared a nationwide bank moratorium in order to prevent a run on the banks. And he also forbade banks to pay out gold or to export it at all. And surprisingly, and this is where I would imagine it was extremely controversial, is he forced citizens to sell their gold holdings to the government at an official fixed price of $20.67 per ounce. So all the pieces were in place, and FDR, now he can go in for the kill. So on this very day, June 5th, 1933, under FDR's leadership, Congress passed a resolution that amended existing contracts to state that parties actually don't have to pay back their debt in gold, but instead could use paper money. And on this news, the dollar plunged 11.5% against European gold-based currencies, while inflationary expectations made stocks rise in what would be the most active trading day of the year.
Wow. I didn't know that, actually, that the stocks rose on that day.
Yeah, it was I don't
really remember. I was busy that day. I wasn't there. I wasn't paying attention.
So this is the cool part. This was a year later. The government pulled the old switcheroo. They officially, after collecting everybody's gold, they officially increased the price of gold to $35 per ounce, effectively increasing the value of their own reserves and the Federal Reserve's balance sheet by 69%. So by removing the U.S. from the gold standard, the government could now pay all its interest and principal due in paper money. So now, because the dollar had actually appreciated so much, it effectively reduced the amount the government paid on its debts versus what it would have paid in gold just 2 years earlier. And just, how this played out for the rest of history, price of gold remained $35, the same price, until 1971, when Nixon announced they'd no longer convert dollars to gold at a fixed price, And that was the final nail in the coffin where the U.S. completely abandoned the gold standard.
Taylor, that's a great story. You know what's interesting is that we were joking about me being around, and obviously we're doing that in jest. But my father used to tell me that there was a time when you couldn't open a bank safety deposit box without a bank person being there because they were making sure that you didn't have any gold, and that they would actually go and try to confiscate it from you.
Wow!
It was illegal for Americans to own gold privately, because everyone was supposed to have sold it to the government at that first price, the $20.67. So at that point, it became illegal for private citizens to own gold. And it's also interesting why, for a little while before they were allowed to own it again, the largest futures exchange that traded gold was actually in Winnipeg. For about a year or two before the COMEX got going, the Winnipeg Stock Exchange or the Winnipeg Commodities Exchange traded more gold than anywhere else.
Oh, that's interesting.
Yeah.
I guess I would want to ask you, this is almost like what Elon Musk did, right? He's like, oh, hey, we might get bought out at this price. And then, huge jump. It's like, the government kind of did that. I guess I'd be interested to see what it was actually trading that day, the day before they announced it.
So gold didn't trade. That was the thing. It was pegged and the government dictated the price. And it would only be gold, therefore, would change between countries as they would do the arbitrage. You mentioned the fact that they would get shipped off. And the fact is that it was too low a price. So therefore, everyone was taking the gold out of New York and shipping it over to Europe. And that's why they were losing all the reserves, because it was set at too low a price.
Interesting.
Anyways, that's fascinating. Thank you very much for sharing that with us, Taylor. Okay, time for our WTF clip of the week, and you really outdone yourself this time. I thought you would never beat that one that I liked, the Mr. Rogers one, but I think you might have done it. What do you got for us?
Well, we all know Dave Portnoy, Barstool Sports, is all the rage on Twitter, and he's winning. I think he just did a tweet this week. He's up a lot of money. And it's amazing.
What was he up? What did he tell you what he's up? Do you know what he's up?
He said he was up $5 million. He's like, since this whole thing started, I'm up $5 million. And then he's like, I make so much money, and it was crazy.
Although he doesn't call it million, he calls it 5 milli. It's milli. That's
milli.
It's 5 milli. 5 milli.
So this Portnoy tweet, and then this video of him realizing. Anyway, I'll let you guys watch the clip. I had a lot of fun. It practically edited itself, so I just hope you guys have as much fun watching it as I did making it.
Since I started talking about the score, it's up another 12%. Am I single-handedly moving the price of this stock by talking about it? It's up 43% now. I think I just discovered a new door into the Matrix. What the hell? I don't understand the rhythms of what's happening.
Hello, Neil.
Holy shit.
I am the architect. I created the Matrix. I've been waiting for you. You are the eventuality of an anomaly which, despite my sincerest efforts, I have been unable to eliminate from what is otherwise a harmony.
I don't want to say I'm smarter than Buffett, but clearly I am. Everything's going up. Stocks only go up.
Precisely. As you are undoubtedly gathering, the anomaly is systemic, creating fluctuations in even the most simplistic equations.
Bro, you work for a network. I am the network. Stay in your lane, suit.
Interesting. But rest assured, this will be the 6th time we have destroyed it.
Is it going to go right back down, or is it up?
And we have become exceedingly efficient at it.
Am I going to get arrested?
It's big pimpin',
Everything is so fucking green.
Spinning cheese.
That's terrific. That's a great video. Well done, Taylor. Obviously, Portnoy gives you a lot to work with, but you did a great job at weaving the Matrix in there.
Yeah, thanks.
Yeah, it's just wow. It's unbelievable. I can only hope. Let's all see if we can get Dave to retweet it. So everyone, tag Dave and let's see if we can get him to retweet it.
I would die a happy man.
There you go. Let's make it happen for Taylor, folks. Thanks again, Taylor. Okay, it's time for the top 3 things to watch next week. But before we do that, we have the top 3 things that we said for last week. Taylor's going to stay with me here and see if we can kind of stumble through this together. So, Taylor, why don't you tell us what was number 3?
Number 3 was lumber and home builders.
Yeah, so Patrick was probably bearish as usual. He's always looking for this thing to roll over and these things to go down. And much to his dismay, probably these things have continued to chug higher, and they actually had a great day this Friday. So it's not happening, and unfortunately, we'll have to wait another week for Patrick's bear thesis to plan out. What do we got for number 2?
So we got U.S. ISM and jobs numbers.
The big one ended up being the jobs number. So we're taping this Friday, and the jobs number were blowouts. It's the S&P finished up almost 2.5%. The NASDAQ was up 2%. The unemployment number wasn't as bad as feared, and it was just a full-on, risk-on kind of atmosphere that ended up being kind of the pivot, that really pushed the stock market out to new highs. So the job numbers were important to watch. And finally, what did we say was the number one thing to watch this week?
We got the ECB and the Bank of Canada monetary policy statements.
So, we as Canadians, we always try to make ourselves seem more important than we are. The BOC was a complete sleeper. It didn't really matter. But the ECB really did shock a lot of people. Madame Lagarde is figuring out how to actually go and under promise and over deliver. And interestingly enough, even though she increased the stimulus on the monetary side, the euro rocketed higher. So looks like she's finally figuring out this game. And that was kind of also another important day in the markets. Okay, so let's go to the top 3 things to watch next week. What's our number 3, Taylor?
We got, will gold break down from here?
So I think this is an important thing to watch because gold has been up here. It's obviously benefited from the safe haven flows as everyone's been worried about the COVID or the second wave and all that. And as we get a situation where the reopenings don't seem to be going as badly as the bears expected, will they go and pitch their gold? The other problem that's really weighing heavily on gold is the fact that bonds are struggling, and that's giving a kind of increase in real yields, which is causing it so that gold now all of a sudden has some competition because you can go out and actually buy a bond with a yield. So between these two things, gold has had some trouble. So far, I've actually been quite happy. I don't think that this decline in gold, although it's been kind of hurtful if you're long, I think it could have been a lot worse, and I'm hopeful that this is the worst that we've already seen it. So what do we got for number 2?
Well, that actually ties in perfectly because next week we've got some pretty major bond auctions.
Right. So the Fed is coming to the market, and they got a lot of bonds to sell. I think this is actually going to be something that everyone should have on their radar. Bonds broke down this week on this unemployment number. Will they continue to accelerate to the downside, driving yields higher? The fact that we have all this supply leads me to think that the lows might not be in. And finally, the number one thing to watch next week, what do we got?
We got the FOMC meeting.
This should be interesting. Usually I would say you wouldn't expect very much, but with the stock market rallying to new highs and financial conditions loosening, I'm wondering, does the Fed get worried, and are they going to start to try to pull back and kind of guide the market towards a little more sanity? Who knows, but it's definitely something to watch. Okay, so let's go to the parting wisdom. I chose this week's. I really like it. It's Linda Raish. She says, lose your opinion, not your money. I think that is such a great kind of attitude because a lot of people would seem to just sit there and fight a market over and over again without losing their opinion, and they also lose their money. You're better off just skipping changing your opinion and keeping those shekels in your pocket. Okay, well, that's it for our main show this week. We appreciate you tuning in. We couldn't do this show without you. I'd like to thank Louis-Vincent Gave and also Kuppy. And a big thanks for Taylor for subbing in for Patrick on short notice. If you like something on the show, please share it with your friends. You never know. The bigger our following, the better chance we have at getting Jay Powell on the Huddle to get his thoughts on Kuppy's tanker conundrum. But before we get to the after show, here's where you can find us. You can listen to the Market Huddle on all networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people listening like following along on YouTube to see the charts and visuals. And while you're there, please like and subscribe to get our latest content. You can follow us on Twitter at The Market Huddle. We're on Twitter every day. Give Lena a big shout out and let her know you're listening. And please, if you could, rate us and review us on iTunes. It would help us out immensely. My partner, Patrick Ceresna, can be found on Twitter at Patrick Ceresna, and his trading wisdom can be found at bigpicturetrading.com. You can find me, Kevin Muir, on Twitter, and also you can follow my newsletter at themacrotourist.substack.com. And listen, you can never have too many friends. Bear market, bull market, we're just happy to spend time together on this crazy ride. So thanks for listening. Now stick around for the after show. Okay, Lena and Taylor.
Hey.
Do you appreciate your partner so much more now?
Oh, I do. Well, you know what? We replaced him. We have
we got the young blood.
The young blood. I'm not allowed to say it. I'm just a younger guy. Did you notice that? I had a time when I was going to say it, and then I was like, nope, not going to say it. You're not going to get it.
That's a good drinking game, though.
Yeah, it was a good drinking game.
Millennium, we got to take a drink. Too bad we don't have any alcohol left.
Yeah, that's...
You're going through that top three, and I had, I'd be like, oh, well, Kev, can you give us some examples of when the Bank of Canada policy, when it did have a big impact on the market? I was like kind of like fanboying on the top three. I was like, should I?
Okay, so listen, we have a couple of things to talk about. The first thing we have to discuss is the fact that Lena thinks I should cut my hand off.
Oh, we gotta back it up though.
Yeah, I said for those who don't know, I had a mountain biking incident, and I broke my hand. So I've been trying to pecking away with one-handed on the keyboard, and today I went to the doctor to find out if I needed surgery. Still up in the air, but during the time I got a picture of my X-ray, and I passed it over to Lena, and she said, "Well, it's okay. You don't need that anyways. Just tell them to take it off." I thought that was a little harsh.
God gave you two.
I thought it was harsh.
Now, when they give you surgery, can you get them to replace it with something cool, like a hook or
a beer cozy?
Yeah. Oh my God. A Coors Light beer cozy.
Yeah. Or like a bionic hand. Wouldn't that be cool?
That would be cool. Listen, Lena, I grew up with $6 Million Man, which sounds funny now. Like that was a lot of money back when I would watch that show. I remember I had a shirt that did $6 Million Kid, and I thought it was awesome. I think
nowadays not so much. It has to be like something else, right?
Yeah, like $6 Billion Kid is what it's. Like
exactly.
That's basically what like half of LA kids are worth these days, anyways.
Exactly.
Yeah. So let me just look at $6 Million Man. What year that was? Because I'm a little scared.
Wasn't there also a movie?
Oh yeah, but there might have been, but the real one was the show. That was the awesome. Oh my God, this is old. It started in 1973.
Wow.
What?
Oh no, the movie. Sorry, no. So the pilot was 73, but then it aired from 74 to 78. So I was 8 or something. I was probably right at the end of it when
oh, you're dating yourself again.
It's okay. But anyways, it was pretty cool.
That was like right around the time when Nixon cut off the gold standard.
Exactly.
Look at that. So perfect timing.
Look how that turned out.
So I was too busy watching $6 Million Man to figure out what Nixon was doing.
Oh, there you go. You were distracted.
He's like the original RoboCop, yeah?
Yeah, I guess you're right. Yeah, kind of.
He's like a real life Inspector Gadget sort of situation.
I don't know. He was in the army or something, and then something happened to him, so they made him better and faster. But they basically just sped up the tape when he ran. Okay, so listen, I've talked enough about my old man stuff. You guys talk amongst yourselves of something young. What are you guys up to?
Well, I think Lena and I both agree. The housing market it's a head scratcher.
At least the Toronto housing market anyway.
Yeah.
Well, you know what? It's not just Toronto. I saw the Toll Brothers had the most deposits put down on new houses since 2005. So it's everywhere.
Oh, wow.
Wow.
Yeah.
So what you guys are monitoring the prices, and you're expecting them to go down, and they're going up, right?
Yeah, exactly. Like, I did this monstrous report, and I did all this, I did all this analysis, and I pulled up all the data, and I did all this stuff, and I was like, you know what? It's going to go down. Toronto's a hot market. It's going to go down 30% in August. By August, it's going to go down 30%. And my wife's like, are you sure? And I'm like, yes, I'm sure. She's like, because you're banking our future on this. And I was like, I got it. And now today she's like, do you still think it's going to go down? And I was like, oh, man, I need to ask someone. Lena, what are you doing?
I'm renting. That's what's going on. I'm renting until I see this through, because the housing prices are outrageous in Toronto, I feel. And like, my parents live in the States, so they are already encouraging me to invest in properties there, because it's like fraction of the cost. But with everything that's going on in the US right now, that's also uncertain. So I'm going to be renting for foreseeable future.
Yeah. You know what shocks me about it is that I understand housing staying firm, but I don't understand why condos were more offered. And especially, like, that's where we had, the most supply. It's easier to come on. It's also where you had all these Airbnb people renting out condos. I would have thought there would have been way more stress in the condo market than there ended up being.
To me, it feels like the. We were incognito in some Airbnb Facebook groups to be like, what's the vibe, right? Like, when do these people start to panic so we know when it's going to turn, right? And everyone's holding on, and they're like, well, tourism's going to come back, but no one's going to be going to school this year. Tourism's dead this year. There's no event, so it's like I just don't see how people can be renting out their Airbnbs for twice the mortgage a month. Like, I don't see how that's going to happen.
Well, I don't even think it was covering the mortgage before. I think they were counting on the price appreciation to skate them on side. Like, I think these things are cash flow negative. They trade so tight.
Yeah, and I just don't see it in the numbers yet. Like, and even in the news cycle too. It's hard to tell. Everyone's kind of still bullish on it. And talk to a real estate agent. Like, we just did a real estate offer on a place, and they listed it at $750. We put in something, and we're like, okay, this is pretty decent. And then they come back and they go, oh, he's coming for mid 800s. And we're like, mid 800s? What are you doing, man? Like, this isn't the same market as it used to be. So,
right. Well, I guess it is, though.
But I think there's a high demand. There's people that's been waiting to, get into the housing market. And I think they're all expecting it to all go down because of all the stuff that's happened so far this year. But because there's such high demand, that the prices are not going to drop anytime soon. So it's a catch-22.
So go ahead, Taylor.
I was just gonna say the kicker to the end of that story was that there was actually only two bidders, and we were both around asking. And meanwhile, the real estate agent and the owners thought they would get mid 800s, which is
so it wasn't a real offer. Like, that wasn't the real price. This is what's the problem in Canada. We're so used to it trading through that we don't actually think that that's the real price anymore. Do you know what's funny? I'll date myself again. I bought my first house, and it was at the start of that whole phenomenon of people paying through. And I was lucky enough to do well as a young buck on a trading desk. And we started looking for a house, and we had trouble finding a house. And finally, we found one we liked. And the agent said, "Well, it actually sold this morning." And I said, "Well, is it like done?" And they go, "No, but somebody's willing to pay offering." And I say, "Well, I'm willing to pay more than offering." And so I remember sitting there going, okay, well, let's put together a bid. And so I remember putting the bid, and it was like, I can't remember. I don't know what the number was. But I went through the offering by a decent amount, but it was kind of like, I was like, nobody's going to care if I go through the offering like 10 grand. Like, that's not going to be worth it. So, like, I made it enough to matter. And I remember the agent looking at me saying, like, you're nuts. Like, you're, like, crazy. Like, and he's like, are you sure you want to do this? I was like, yeah, this is our house. Like, it's not going to matter. This amount isn't going to matter. But up until then, nobody had done that. And now it's considered standard that you list a house for there, and then that's not really the offer, and they expect it to go through. And I think that's just kind of 2 decades of Toronto real estate going crazy that we've kind of gotten ourselves spoiled. Like that we think that that's how it works, right?
Oh yeah.
And it doesn't. It doesn't.
Yeah.
Like there's lots of markets that you put in a bid and it's below, and then the offering comes down, right? Like it's just kind of. But anyways, Toronto is crazy. Although Taylor, we're kind of both aware of what's happening in the Toronto tech community, and the fact is that you look around at these people and there's like companies coming here and they have just thousands of young people. I'm not going to say it, but thousands of young people, and they're earning good money. And you wonder, like I always kind of felt like that, like where do all these bids come from? And then all you have to do is look around at some of these companies that are, hiring at like Microsoft, Google, and you realize that there's all these young people that are just, they don't have any other expenses. They don't have families. Oftentimes, it's them and some little dog, and they're willing to pay for their condo.
Yeah.
And this is what's driving Toronto.
Well, you did.
Yeah.
Oh, sorry, Lena.
No, go ahead.
Oh, I was just gonna say that, like you hit it on the head there when you said "and their little dog," and the reason that we have dogs is because we can't afford a house and a child. We can't afford childcare in Toronto, and and then but what about all these all these foreign buyers? What's I could go on. Don't get me started. It's a Friday night.
The foreign buyers, it actually should be interesting because with Hong Kong, I think that if I'm sitting there and I'm in Hong Kong and I'm a wealthy person there, I would be going and taking offerings in Toronto and Vancouver like as my escape route. Now, they probably already have it in case anyways, but I would be buying more.
Yeah.
Because you need something, right? Like, and I actually do believe that there's probably more of a bid coming from overseas due to the unrest over there than we think.
Interesting.
Oh, 100%, probably. Like
Yeah.
in Vancouver, foreign buyers is kind of almost expected all the time. When I lived out there a few years back, you can walk down like Cole Harbour, which is basically like a hip and happening place with all the new condos and such. Half of the units there, if you look up at the buildings, they have all their blinds drawn, they have all the curtains closed at all times, and lights never come on. It's all foreign buyers that are buying these properties and leaving it vacant until they need it.
Right. I heard of people buying whole floors.
Or yeah,
Wow.
like I went to some sort of like a model house or that sort of like a presentation center, and this gentleman was, I'm not sure what his background was, but he was an Asian gentleman, and he was looking at it. He's like, okay, this is, I can't remember what the units cost, but they were expensive, and he's like, yeah, I'll take 10 of those. It's just like, what?
It's like ordering
what just
sushi.
happened?
I'll take 10 California rolls, some sashimi. I'll take the penthouse too.
It's just like, yeah,
Let's
give
go.
me the water, waterfront view, and da 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 da. I'll take 10 of those, and it's just
Nice.
like, okay, not
Oh,
a place
well.
for me.
Okay, so we talked about housing. We'll just end it with, I know we weren't going to say that we talked too much about what we're watching, but I'm going to go back to it. You watch anything interesting?
Ooh.
know
I
what's-
just
I
started
so-
watching Seinfeld again.
Oh my God, really?
Yeah, I completed Netflix, so I'm on to Seinfeld from episode 1 again.
That's
but
a
you know
good
what?
line. I completed Netflix.
I started watching Seinfeld again from like episode 1, from the pilot episode.
Yeah.
And I'm so surprised at how relevant it is still. Like
Oh,
the
yeah.
humor.
Well done. Yeah.
Yeah.
I actually had
So well done.
I was watching something about it the other day, and they were talking about some of the groundbreaking things that they talked about on Seinfeld, and they were talking about like masturbation, and then they said that they talked about oral sex, and I was like, what? I don't remember the oral sex episode, because everyone remembers Master of
You
Your
would
Own.
have remembered.
Well, yeah. Everyone remembers Master of Your Own Domain. That was a terrific episode, when Kramer, basically the first night is out, and like that's like awesome. But I forgot about the oral sex one because it's the one called The Tap. And you got to go watch it. I had forgotten about it. It
The
sounds like you guys had
saxophone?
too.
Saxophone
The
guy?
Tap. Oh, maybe it was the saxophone, but it was called The Tap because George got tapped. He got the
Oh,
tap.
yeah.
And he's like, oh, that's not good.
Oh, now I have to
got the
find it. I
tap.
don't even know what season.
You got to
I
go
don't
get
even-
the tap.
My favorite Seinfeld was Soup Nazi.
Oh, you like the
these
soup
things.
Nazi?
Oh,
Yeah,
yeah.
that's a
Oh
pretty
yeah,
good
it was my favorite
it's good.
episode for a long time. So.
one. Yeah,
But yeah,
fun.
that's where I'm at. I finished Netflix and now I'm on to old Seinfeld.
Okay. And how about you, Taylor? Are you watching some crazy horror film still?
Well, if anyone is listening right now who's into horror films, I've seen a bunch of them. I'm looking for good horror. I don't care where it's from. I will watch anything, subtitles, whatever. Give me your best horror stuff. So, because all I've been watching is bad horror films. And we also started watching The Great, which is that one about like the Russian Empire. And anyway, it's good. I think it's on Crave, which American listeners I don't think will understand, but it's a good show. Yeah.
Well, there it is. Send your horror picks to Taylor.
Please.
He needs to know his horror films.
And
Did you ever watch The Ring, the Japanese version?
I don't think I did watch
Oh,
the
you have to watch it then. You may not be able to sleep in the room where there's a TV or a monitor.
Why the Japanese version?
The American version was good, but the Japanese version, when I watched it, I can easily say that I was traumatized. Like, I could not sleep when there's like any kind of monitor in the room. I couldn't sleep. I had to go to a different room.
Really? Because of the
yeah.
Japanese version, though. Interesting.
It's not so much that it's horror. It's just it kind of creeps up on you. It's super creepy, super strange, and super bizarre and morbid. It kind of screws up with your mind a bit.
Well, there you go.
So
That's
if you
nice.
can find it, watch the Japanese, like the original Ring from Japan.
You
from,
sound like those
I don't know,
those kind of music snobs that go out. You know, I like The Cure before they got popular and sold out. I don't like anything past this. Like,
No.
Sorry, Kevin. Who's the
I
Cure?
watched the American version.
you know who The Cure is. Don't give me that. You know what's funny is that I watch the kids these days, and actually it's not your generation, it's the younger generation. They love the 80s. We sit there and watch our kids, and they are all dressing like all the stuff they dress in we could have worn. Like, my wife's like,
Yeah, to them it's vintage.
it is vintage. It's pretty cool.
Yeah.
Like, I don't have any hair anymore, but my son's got cuts that just like we wore when we were kids, like the floppy kind of with the shaved on the sides, and like it could have been straight from 1986.
Oh wow.
But they do not
86.
like the same music. They do not like the same music. Like, I must say,
No, they don't.
The style is similar, but they're definitely not into the same music. At least my kids aren't. I gotta find the kids. I gotta trade them in for kids that like vintage.
I don't know what
80s
kind
music.
of music kids listen to these days either. I'm so out of the loop.
It's bad, but that's just my opinion.
It's just bad. It's just bad.
I had one of my children that for a while looked like she was gonna like kind of college indie music, which is what I like, and she was going good, and it was headed that way. And then somehow it changed, and now it's like, I don't know, it's weird stuff that I don't like. It's what's that lady? Actually, she's not that bad. What's the one young girl that
Billie Eilish.
Billie Eilish.
There you go, Billie Eilish. Yeah, so
Eilish.
I know. I'm just making fun of her. So it's that kind of stuff. So it kind of went downhill because it was looking good. I thought for a while, like I took her to she wanted to go see Frank Turner, which is like one of my favorite guys, and like there was looking for a little while. Like I was like, oh, you're gonna be like Sirius XMU channel 35 with me, right, on Sirius XM.
And then she took a left turn.
And then it just went bad. I don't know. I don't know what I did wrong. I don't know what I did wrong.
Oh, you probably tried to get her music from XM radio, and that's satellite radio. You don't do that. That'll turn the other way.
Yeah. I'm showing my age by liking satellite radio.
Yeah.
Yeah.
You know what's funny is, you know what the most popular channel on satellite radio is?
What is it?
You guys don't even know. I'm asking. I might as well be talking about.
It's Howard Stern.
No, the most popular channel is the 80s rock or 80s whatever. Not the new wave channel, just the pure 80s one.
That's kind of like going into an old age home and being like, did you know prune juice is the most popular thing here? And you're like, yeah, well, get out of town.
Okay, we got to leave it on that. That's a great, awesome line. That is a good line. Good line. And don't say anything bad about the prune juice. I love it. Okay. Thanks for listening, everyone. Have a great week. We'll see you next week.